Hello everyone, George DeSantis here with the look at the market for the week ending October 7th, 2016. Before we get into the charts, let me do what I usually do, and that is to read this disclaimer. Trading and investing has large potential rewards and large potential risks. So this video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any particular securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. Consult a licensed professional investment advisor for investment advice. I am not one of those. Let's take a look at the monthly chart of the S&P as we usually do to begin things here today. The monthly chart of the S&P 500, we've only had 1 week of trading in the month of October, of course, but so far we have a very small bodied candle, or if it were a candle, it would be a small body candle, something like a doji. It seems as though the market is consolidating the gains that it made in July, August, and it's consolidating those gains here. The parabolic is below the most recent bar, October's bar, so there's no indication on the monthly chart to reverse this to a downtrend. The trend is still up because the Kalman filter is above the instantaneous trend line. In the middle of the chart, MACD is just about neutral. It's at about the zero line. To be exact, it's at 0.21. So you can't get any closer to zero, much closer to zero than that. The Elder Force Index continues to trade down a bit since we had this bit of a pullback here on the monthly chart. We're just consolidating here. So we'll see where we go from here. But so far, the monthly chart is still trending up. Let's take a look at the weekly chart. And this is the weekly chart of the S&P 500. We can see that the Kalman filter is still above the instantaneous trend line. No doubt it seems to be in a trading range. It is in a trading range here. The market is in a trading range. We do have a triangle formation here from this point here. If we connected these lows and these highs and these lows, we'd be in a triangle. We'll see on the daily chart that we calculated some targets from that. We also have the parabolic below the most recent bar. So there is no indication to reverse this trend as yet. The RSI 12 is still above the 50% line, still showing some strength here. So the trend doesn't seem to be threatened at this time, the uptrend. MACD, the fast average crossed below the slow average. And of course, that means that MACD is below the zero line. It's at minus 4.08. We don't seem to have a divergence here, though. I don't detect a divergence. So we'll wait to see if, and we would like to see MACD resume an uptrend and begin to close above the zero line. That hasn't been occurring yet. At the bottom of the chart, percent R is above the 80% line. It's just sitting right there at 80%. It hasn't dropped much below that at all since this uptrend began in February, as we can see here. So percent R is still in that bullish uptrend. And so the weekly chart is still looking bullish, although we're seeing some consolidation, and there's a question as to whether we will continue to go higher, of course, or go lower. We'll see some indications of that later on, some hints about what might occur when we look at some of the daily charts. Let's take a look at the daily chart. So here's one of the daily charts we usually look at. Interesting. First of all, we had some triangles we calculated targets from. This triangle here, A, B, C, D, calculated a target of 2192. Then we had a triangle up to this point here where we calculated a target of about 2222. And now we have to extend this line to a new triangle. We still have a triangle, but it hasn't been resolved to the upside or the downside as yet. In fact, we are looking at the possibility of this market going a little lower here because, first of all, we have the 9 exponential moving average. This is a 930 chart. So we have the yellow line, which is a 9 exponential moving average, sitting right above, just above the 30 weighted moving average, the light blue line, which is sitting just below the 90 weighted moving average. So all three moving averages are converging on top of each other. So now we have this sort of a wound spring, and we don't know which direction this triangle is going to break out into. So now we can get a hint here. We might go lower because we do have a bearish engulfing candle. This candle, this red body here, completely engulfs the body of this candle, which is Thursday's candle, Friday's candle. So Friday's candle is totally engulfing Thursday's candle, the body. And so there's a real tug of war going on here, in my opinion, between the bulls and the bears. Which way will it go? To be determined. In the middle of the chart, RSI 12 is meandering above and below the 50% line. So there is no direction as yet. We still haven't determined what direction this thing is going to break, to up or down. Williams percent R has been giving us some lower highs and lower lows. So that doesn't look well for, I'm sorry, Williams pro buying indicator is giving us some lower highs and lower lows. So it seems that the big money is selling into this market. Now, Williams percent R at the bottom of the chart is sitting right at 50%. So in summary, the daily chart, this daily chart of the S&P is at a critical juncture. We have this wound spring. All three averages that we have on this chart are sitting right on top of each other, and a bearish engulfing candle. It can go either way. So we wait to see how that develops. Let's take a look at another chart. Now we turn to the NASDAQ composite. And as you know, most people believe that the NASDAQ leads the rest of the market. So that's encouraging for the bullish school of thought here, because instantaneous trend line is way below the Kalman filter. We do have some consolidation here. We have an inside bar, or what is called a bullish harami. So it's bullish. The parabolic is below the most recent bar, last week's bar. So the NASDAQ is looking quite bullish here. The RSI 12 is still above the 6% line, and it's been in a bullish uptrend since it crossed above the 40% line back in February. At the bottom of the chart, MACD is still in bullish territory above the zero line, although it's showing some weakness. But the important thing is that there is no divergence. There isn't a bearish divergence to be concerned about. So we do have some conflicts here. We have a weekly chart looking pretty bullish here, whereas the weekly chart of the S&P also sitting in bullish territory, but the daily chart seems to be at risk. So we'll see how that develops. Let's take a look at the daily chart on the NASDAQ. Here's a daily chart of the NASDAQ composite. And what we see here is that the NASDAQ has been consolidating, and the Bollinger Bands are now in a squeeze position. In other words, they're narrowing. So even though we have we do have a bearish engulfing candle, as we found on the daily chart of the S&P. So since this is a squeeze, and we have a bearish engulfing candlestick from Friday's price action, it's quite possible this thing could break to the downside. On the other hand, we have parabolic still below the most recent bar. So we're at this sort of a critical juncture where this market could break either way. And it's really risky. So, if you have stocks that you're not too concerned about and you're holding them for the longer term, okay. But if you're trading, be careful here. Now the MACD here on the NASDAQ is also right at the zero line. It's really at minus 1.42, just below the zero line. The sine wave indicator is indicating that the sine wave is irregular. And if we click on the expert indicator here and read what it has to say, we'll see that the expert is saying the market is currently in an upward trend mode. The trend mode is usually characterized by erratic behavior of the phase display and the sine wave indicator, as we see here. So your best strategy is to establish a long position and hold until the end of the uptrend. Well, that commentary gives the bulls something to hang their hat on. On the other hand, on the bottom of the chart, we see that Jerry Appel's sum of the rate of change indicator just issued a sell signal. So again, real tug of war. This thing could break either up or down. We have no idea which way to go. If you ask me what the preponderance of evidence shows is, I think we're going to go a little lower here before we make another high. So we'll see how that works out. Let's take a look at something else. Take a quick look at the weekly chart of the S&P, where we have the CCI indicator where I take my signals to go long or sell. It's a long only strategy that I use here. And CCI is still above zero. However, it's showing some signs of weakness. So I do own some CCI, some SSO. Been waiting to see if I could add to position, but I'm going to hesitate on that for a while longer. Let's take a look at something else. And here's a chart of the S&P. It's a weekly chart from Stock Charts showing us the impulse indicator. The bars painted red, white, red, green, or blue. And we can see at the right side of the screen here, you can clearly see that triangle formation. If you drew a line here and a line here, you see that candle that we talked about. So the first thing we notice though is that the 9 is above the 30, the 9 EMA above the 30 weighted moving average, and both of those are above the 50. So it seems as though we have this regression to the mean. We came below the 9, we closed below the 9, and now we have 3 blue bars on the weekly chart. So that means that on the weekly chart we could go long or short. So on the bottom of the chart, you see that percent R is still sitting right on the 20% line. So we're at a decision point here. We'll wait to see which direction we go. If we take a look at the daily chart, on the daily chart, we have a red bar. We can see that consolidation pattern here. And we can see that on the daily chart, the 9, the 30, running right next to each other, right on top of each other, and the 50-day moving average is above those two. And on the daily chart, we can see the Williams percent R is just at the 50% line. So we wait to see now what direction we'll get from this market. It seems to me that we might see a bit of a pullback. However, since the weekly charts are still looking bullish, I'm not selling my portfolio of ETFs, and I'm holding SSO, and I'm holding stocks that I have like Apple and Facebook, etc. I'm not bailing out of this market. It's my birthday today, so I am going to enjoy the rest of the day, watch some football, and be amused by the political shenanigans. You have a nice weekend. See you next weekend.